Do you want to know how to find new investment ideas the best way possible? I'll share a tiny secret with you. Observe the portfolios of successful investors. Large investors are required by American law to disclose every U.S. stock they buy and sell to the public. Why is this so crucial then? The regular investor can utilize this need as a terrific resource to find new investments to add to their own portfolio. The fact that large investors are forced to give out their greatest investment ideas for free makes them despise this necessity, but hey, it's their loss is our gain. In this video, we'll examine the stocks that Warren Buffett has recently purchased and sold. Suffice it to say that he has been rather active lately. We'll go through each of the 9 stocks that Buffett just purchased one by one. You should watch the entire video because, who knows, you might just discover your next brilliant investment concept there. I want to make you a better investor by studying the world's greatest investors, so first, please like this video and subscribe to the channel if you haven't already. Ally Financial is one of the stocks that Warren Buffett's company Berkshire Hathaway recently made significant investments in. The company currently has 30 million shares owned by Berkshire, valued at almost $1 billion as of the production of this video, after Buffett purchased an additional 21 million shares. This is equivalent to a 9.7% interest in the total business. Just as a small side note, Buffett owns roughly 10% of the company stock, despite the fact that this holding makes up less than 0.3% of his overall portfolio. BR Financial is a bank holding company, which is just a fancy way of saying the company covers multiple financial products. This only illustrates how vast Berkshire Hathaway's stock portfolio is. Financial services offered by the business include auto financing, internet banking through a direct bank, corporate lending, auto insurance, mortgage loans, and an electronic trading platform for trading financial assets. But the largest portion of the business is focused on financing or protecting the auto sector. Approximately 80% of the business's revenue comes from lending money to both customers and the actual vehicle dealerships. Given that Ally Financial was formerly a component of U.S. automaker General Motors, this makes a ton of sense. Until the Great Financial Crisis, when GM ran into financial difficulties and effectively had to sell the company. Ally Financial's stock price has had a difficult start to the year. The stock price has decreased by about 35% since January, when it reached a year high. Buffett is leveraging the stock price's downturn to increase his holdings, as is his custom. There is no mystery as to why Buffett would like this name. Ally holds a strong position in the automotive lending sector, a market that has existed for 100 years and is likely to continue to do so for another 100. Despite holding a commanding position, the company only trades at a 5 times PE ratio. The business makes a ton of money, having made $2 billion in cash in the previous 12 months. That money was used to repurchase stock, which the business did throughout the previous 6 months, repurchasing almost $1.2 billion worth of shares. Approximately 10% of the shares that were outstanding at the end of 2021 have already been repurchased by the corporation. Additionally, Buffett is a major supporter of businesses buying back shares when their stock is trading at a discount. Buffett's ownership in the company grows as a result of the company's share buybacks without his having to purchase any further shares. Buffett's Berkshire Hathaway owns almost 10% of Ally, therefore the corporation swiftly increased his holding through significant share repurchases. It will be fascinating to watch if Buffett keeps buying or if he finally tries to buy the entire firm given his already significant position in it. Occidental Petroleum, a firm that explores, develops, produces, and distributes oil and natural gas, was the second stock Buffett purchased in significant amounts during the quarter. Over 22 million additional shares of the corporation were added to the Berkshire Hathaway portfolio, bringing Buffett's total holdings to over 158 million. With a 20% stake, Berkshire becomes the company's largest shareholder. Buffett is an expert in this industry. When Occidental was engaged in a bidding war with Chevron to acquire crosstown Houston rival Anadarko in 2019, he made his initial investment in the company. Buffett made this investment, but the price of oil crashed shortly after. Price in the 20s and 30s per barrel in the first half of 2020, down from a peak of almost $80 per barrel in 2018. Given that Occidental is an oil firm, you can probably guess how crucial oil prices are to the company's health. Falling oil prices caused Occidental to struggle. Surprisingly, Buffett even sold every share of Occidental he owned during the 2020 oil meltdown. Things can, however, suddenly alter. Oil prices have soared so far in 2022, reaching a peak of nearly $120 per barrel this year and staying above $100 for the majority of the year. Buffett's perspective on the business has completely changed. Just over 2 years after selling all of his common stock in the company, he became its largest shareholder. But it doesn't end there. Buffett has made a significant announcement. The federal government gave Berkshire Hathaway permission to acquire up to 50% of Occidental. Here's what I think about this news. Buffett won't be able to buy further Occidental stock until he reaches that 50% threshold. He may then offer to buy the entire business at that point and pay a premium for the remaining shares. This would be one of, if not the largest transaction Buffett has ever made, given the value of Occidental Petroleum, which is close to $70 billion. I wouldn't be shocked if that occurred, though. Buffett has stated for years that he has been wanting to make a significant acquisition, and this may be his opportunity. Paramount Global comes next on our list of stocks. Buffett added 9.5 million shares to his existing holdings, bringing Berkshire Hathaway's position to over 78 million, or nearly 13% of the total firm. As a media firm, Paramount Global creates and offers entertainment-related content via studios, networks, streaming services, live events, and products. The business runs 3 separate components. The cable network segment is the largest, accounting for 45% of total income. All of the cable networks, such as Showtime, BT, Nickelodeon, MTV, and Comedy Central, are located here. The TV entertainment section, which accounts for about 45% of the company's sales, is the other significant division. This comprises of the streaming service provided by the corporation and the CBS television network. Filmed entertainment is the third section, and this is where the business makes its motion pictures. Top Gun: Maverick was one of the business's biggest hits in recent years. With a market worth of little over $16 billion, Paramount trades at a P/E ratio of 11.4 times right now. Buffett has been investing in the media industry for decades and is very familiar with it. Warren Buffett was the largest shareholder in Capital Cities/ABC, a firm that owned radio and television stations across the country during the 1980s and 1990s. Later, the company would merge with the Walt Disney Company to form the media-dominating Disney that we know today. Celanese is the 4th firm on our list of the stocks Buffett is adding to. Buffett increased his ownership in the company by 1.3 million shares to 9.2 million, or 8.5% of the total stock. Although Celanese has a market worth of over $12 billion, I believe it's safe to say that the majority of people are not really familiar with the company. Personally, I was familiar with the name and was aware that there was a chemicals company, but that was about it. Global chemical and specialty materials firm Celanese. Celanese sells chemicals are the simplest and most straightforward way to explain what this company produces. These chemicals are then utilized to create items. Companies in the automotive, building, paper and packaging, food and beverage, and other industries, to name a few, purchase these chemicals. If you're a fan of Buffett, you presumably already know that he enjoys investing in profitable businesses, and Celanese certainly fits that description. The business expects to have free cash flow of around $1.6 billion this year. Free cash flow is computed by taking the cash that a business generates from operations and deducting the amount that it spent on capital expenditures. These include goods like machinery, property, a brand new factory, etc. Celanese has a free cash flow yield of 13.3% if you compare that to the company's current market cap of $12 billion. The better, the bigger the free cash flow yield. With everything else being equal, the higher the free cash flow yield, the more money the company makes in relation to the cost of investing in it. For comparison, the largest investment in Buffett's portfolio offers a 3.8% free cash flow yield. I want to quickly discuss the stocks Buffett is selling before we go on to stock number 5 on our list. The following actions were taken by Buffett in the second quarter of 2022. He decreased his holdings in U.S. Bancorp, a company that makes baked goods, by 5%, Kroger, a grocery chain, by 10%, GM, a maker of automobiles, by 15%, and Store Capital Group, a real estate investment firm, by over 50%. Additionally, he entirely sold his stakes in two companies, telecoms behemoth Verizon and Royalty Pharma, which buys biopharmaceutical royalties. None of these sales represented a particularly significant portion of Berkshire Hathaway's stock holdings. Markel ranks fifth on our list of stocks. Buffett invested in 47,000 business shares. If it doesn't seem like much, keep in mind that each share of Markel is currently trading for more than $1,200. He bought millions of shares in the other firms. With this acquisition, Berkshire's stake in Markel increased to 3.5%, making it the company's fourth largest stakeholder. The easiest way to think of Markel is as a young Berkshire, which refers to the fact that Markel and Berkshire both have comparable business models. Berkshire Hathaway is primarily an insurance provider. Berkshire has a number of insurance companies that produce float, as it is known in the insurance industry. The ability of an insurance firm to hold onto money before paying out claims is known as float. Consider this: let's say you buy a home or auto insurance policy. You pay for the policy in full up front, which means the insurance company gets the money before it needs to pay any claims for damage to your vehicle or home. The insurance business has the option to invest that money to create investment income between the time it receives the money from its customers and the time it is paying on it in claims. Even though it might not seem like much, insurance firms do make their money in this way. The extraordinary $147 billion in float that Berkshire Hathaway had by the end of 2021, for instance, allowed them to make investments. The similar business strategy is used by Markel. The company's principal industries are in the insurance industry, and it uses the profits and cash flow from these operations to buy stocks and acquire whole businesses. The term mini Berkshire refers to the fact that Markel operates on a considerably lesser scale than Berkshire Hathaway. While Berkshire Hathaway's stock portfolio is more like $300 billion, Markel's is only about $7 billion. It's interesting to note that Berkshire Hathaway is the largest holding in the Markel stock portfolio. Actually, Markel is the Class A shares of Berkshire Hathaway's 13th largest shareholder. McKesson is number 6 on our list of the stocks Buffett is still purchasing. Buffett increased his ownership of the company to 3.2 million shares after purchasing 276,000 additional shares. Currently holding 2.2% of the business, Berkshire is the 6th largest shareholder. Pharmaceuticals and medical supplies are distributed across North America by McKesson. Consider McKesson to be a wholesaler of prescription drugs. They purchase branded and generic medicines on behalf of producers, then send them to pharmacies. Wholesalers of pharmaceuticals act as a middleman between sizable and fragmented marketplaces. There are 1,300 manufacturers on one side, including Pfizer, Eli Lilly, and Teva. On the other hand, there are more than 180,000 distribution points, including hospitals and your neighborhood Walgreens, CVS, and Walmart. McKesson makes enormous amounts of money. Over the previous 12 months, the company's sales was close to $270 billion. The portion of that revenue that actually contributes to the bottom line as profit, however, is incredibly small. Despite making $270 billion in sales, the corporation only made a net profit of $3.5 billion. We may calculate that this represents a net profit margin of roughly 1.3%. Apple, Buffett's largest holding, had a net profit margin of 25.7% during the previous 12 months. To put that into context, Coca-Cola, a significant holding in Buffett's portfolio for many years, had a net profit margin of 26.1% in 2021. Despite its small profit margin, McKesson does possess a crucial quality that fits with Buffett's business philosophy. Buffett calls the moat that McKesson has a moat. A moat is a competitive advantage a business possesses that keeps rival businesses out of its market and away from its customers. The scale of McKesson is its greatest competitive advantage. Due to its size, a corporation must have scale advantages in order to profitably function with very low margins. Consider Walmart in the US as another illustration. A new company entering the market has no prospect of being profitable without enormous scale like McKesson. Three major companies, McKesson, AmerisourceBergen, and Cardinal Health, control the majority of the market. There's no opportunity for a new company to come because these three corporations dominate the market by more than 90%. Activision Blizzard is ranked number 7 on our list of stocks Buffett is still purchasing. Buffett increased his interest in the company to 68.4 million shares by purchasing 4.1 million additional shares. With an 8.8% stake in the company, Berkshire is the largest shareholder. One of the biggest developers and publishers of video games worldwide is Activision Blizzard. World of Warcraft, Overwatch, Candy Crush, and Call of Duty are some of its franchises. You might be pondering a crucial question for yourself. Why would 92-year-old Warren Buffett invest in a maker of video games? You'd be right if you said he knows nothing about video games. This investment isn't made in the usual Buffett manner. The term merger arbitrage bet is used to describe this. I'll explain. You would think that when this deal was announced, the price of Activision stock would be trading at $95 until the deal goes through, considering that this is the price Microsoft announced they would be buying the shares at. Back in January, Microsoft announced that it would be acquiring Activision for $95 per share. When most publicly traded companies are acquired, that is how it goes. But there is a significant difference in this agreement. The possibility that the government will approve Microsoft's acquisition of Activision is not 100% definite. In actuality, there is a good probability that the agreement won't be approved by the government. This is the reason why Activision's stock trades at a discount of 18% to Microsoft's stated purchase price of $95 per share, assuming regulatory approval. Buffett isn't actually investing in the company in his typical manner when he makes a merger arbitrage bet. Instead, he is placing a wager that the deal will be completed. If the deal goes through, the profit on his investment will be the difference between the price Berkshire paid for the shares and the $95 per share purchase. But this wager has one significant danger. The share price will increase if the offer is rejected and Microsoft is unable to complete the acquisition, much as it did when it was revealed that Elon Musk would no longer be buying Twitter. When placing a merger arbitrage wager, only two factors matter. Depending on whether the deal closes, money will either profit or lose money. Buffett obviously likes his chances, otherwise he wouldn't have made the investment. The stocks ranked 8 and 9 will be discussed together because they are both rather modest additions to positions that Berkshire has incisively. These stocks are Chevron and Apple. Buffett purchased 3.9 million Apple shares, boosting Berkshire's total stake in the technology business to 915 million shares. Berkshire now owns 5.7% of the entire company, which may not seem like a sizable holding until you consider that Apple is presently valued at $2.6 trillion. Yes, Berkshire's share is worth $148 billion and trillion dollars. Additionally, Buffett invested in 2.3 million Chevron oil firm shares. With this acquisition, Berkshire now owns 163.5 million shares of Chevron, or 8.4% of the total firm. I bring up these two stocks together for a reason. Buffett maintains a stock portfolio that includes about 50 different stocks. About half of the stock portfolio is made up of these two stocks, Apple and Chevron, with Apple making up the majority of it with a 42% share. Warren Buffett usually discusses how he wants to have a concentrated portfolio of stocks, yet Buffett has actually come under fire, with some claiming that his stock portfolio is now extremely diverse. These opponents use the portfolio's 50 or so stocks as an illustration of their point. What these detractors, in my opinion, fail to understand is how concentrated Buffett's portfolio still is. Over 40% of the portfolio is invested in just one stock, Apple, while the top 5 holdings, Apple, Bank of America, Chevron, Coca-Cola, and American Express, combine to account for a staggering 73% of the portfolio's stock holdings. I'm not sure what else could be concentrated if that. I appreciate you watching this video. To help you become a better investor, don't forget to like this video, subscribe to my YouTube channel, and hit that bell notification for more videos like this. Thanks for watching.